we are in earnings season, and this is a period where, publicly traded companies release their financial statement, to investors and economic watchers and company watchers across not just Nigeria, but within the global space. And today we have seen quite a number of reports released recently from Airtel Africa to Nigeria Breweries and a lot more. But we will be taking a close look at some of this report. And we'll start off with Airtel Nigeria, where it released a 9 million company earnings for the year 2023. However, it also did state that it had a negative EPS, and we took a close look at that report. And in that report, Airtel Africa actually disclosed a negative basic EPS of about 1.6 cents and announced its intention to initiate a share buyback program of up to $100 million. And we did see a statement released by the group CEO, that is Olusegun Ogunsoya, where he provided insight into that report. And he talked about the relationship between earnings per share and share backs, which he said was an intricate development within Airtel Africa. And he also did say that the company's financial metrics, the shareholder returns and market perceptions had increased over the past year. And he also did talk about in particularly the negative EPS, like I stated before, where he said that it is calculated by dividing the net income that is available to common shareholders by the number of outstanding shares, which is a reduction in the number of shares outstanding due to buybacks, and it can increase the EPS, all else being equal. And I'd just like to point out particularly that according to the released financial statements, the EPS before exceptional items stood at 7.1 cents, and that indicated a decline of 34.6%, and that was compared to the previous period where the basic EPS had experienced a substantial decrease from 12.5 cents in the prior period, negative to about 1.6 cents. Like I stated before, we had seen Airtel Africa, release the financial statement for the year 2023 showing a negative EPS of 1.6 cents. And the decline contrasts, with the compound annual growth rate of 14.5% observed over the past 4 years. And a review of the company's financial also reviewed or showed that the recent decline in EPS before exceptional items and negative basic EPS have reported, represent a departure from the company's historical trend in basic EPS. So we are seeing, a somewhat negative report compared to the previous performance of Airtel Nigeria in previous years. And the decline contrasts with the compound annual growth rate of 14.5%, which had been observed over the past 4 years. And, there has been conversations around this report. And from the foregoing, there has been economic watchers and analysts that have said that there could be a plausible decline in the EPS, in the coming years, and the expectation of further decline, which could have influenced the decision to implement a share back program. It's also possible that the company perceives its shares are undervalued in the market. But despite this, a look at the company's stock prices reveals that there has been limited growth in recent periods. Indeed, we have seen some levels of growth, within Airtel Africa, talking about the NGX so far in this year. But we will be on the lookout to see just how well Airtel Africa will perform, at least in the first quarter of 2024. Will there be any changes, or should we expect, the negative trajectory to continue within Airtel Africa? Well, we will be on the lookout for that. Away from Airtel Africa now, we have seen, reports from PZ, that is PZ Cousins, released for the year 2024 as well, where again we saw some negative trends within that report. And I'd just like to say that it has unveiled its financial result for the second quarter of the fiscal year of 2023. We saw that report recently released by PZ, where the company reported a pre-tax loss of 73.8 billion naira, and that is marking a significant downturn of 893%. Again, we are seeing the continuous negative trend within the market. Again, this is playing out with PZ Cussons, and we saw an 895% downturn compared to the 9.3 billion naira pre-tax profit, which was achieved in the same period of the preceding fiscal year. That is within 2022, the second half of 2022 fiscal year. And we did see the group accrue a pre-tax loss of 35.2 billion naira, marking a 548% year-on-year decline from the 7.8 billion naira pre-tax profit, which was accrued during the corresponding quarter of the previous fiscal year. And according to the company's unaudited financial results for the second quarter of 2023 and 2024, the group posted a half-year revenue of 68.1 billion naira in the first half of 2023 and 2024 fiscal year. And that reflects a 19% improvement from the previous quarter. And I'd also like to mention that during the quarter, which had ended in November 30, 2023, the group had recorded a revenue of 37 billion naira, which I must point out reflects a 24% year-on-year growth from the corresponding quarter in the previous fiscal year. And there has been a lot of attribution to the forex woes that Nigeria is currently facing. And we also did see PZ Cussons Nigeria post a gross profit of 21.9 billion in the first half of 2023 and 2024, and that's reflecting a 61% year-on-year increase from 13.6 billion posted in the corresponding period of the previous fiscal year. However, again, still speaking about the FX issues that have been experienced lately due to foreign exchange loss of 81.1 billion naira in the first half of 2023 and 2024, the group recorded an operating loss of 77.0 billion naira with a whopping 5,224% year-on-year decline from 1.5 billion naira operating profit recorded in the first half of 2022 and 2023. Again, tremendous losses from yet another company, again attributing its loss to FX woes that have been experienced with a whopping 5,224% year-on-year decline from the 1.5 billion naira recorded in the first half of 2022 and 2023 fiscal year. And let's go down to the oil sector. We have also seen earnings reports from Etana Oil, again reporting a slight loss from that company. We did see its earnings report for the fourth quarter of 2023, where we saw loss after tax of about 5.68 billion naira. Again, another company, recording losses in its financial statement for the third quarter of 2023. And that was significantly below the projected profit after tax of 309 million naira. And following the release of the company's results for January 31st, 2024, as of the close of trading, we saw that the share price of Eternal Oil had declined by about 19%. And this decline had moderated the year-to-date gain to even drop further. And this was obviously due to the release of the somewhat disappointing financial result, which had given, a negative sentiment to the Etana stocks over the weekend, from Friday into this week. And that was due to, the negative market reactions from investors, including a decline in the company's stock price, as well as the increased volatility and decreased investors' confidence and interest in Etana stocks. We have also seen that there was some substantial difference between the projected profit and the actual loss, which had suggested potential challenges in Eternal Oil and the market conditions which had been projected, in the financial 2023 financial year. And while the company sustained some respectable top and midline performances, which was evidenced by the significant increase in gross profit by about 99.89%, we had also seen little level of growth, but mostly we had seen bottom line performances come from Eternal Oil, where it had experienced a foreign exchange loss also. And if you would notice, most of the reports that we have reviewed have had one thing in common, and that was the foreign exchange losses that had been recorded. And Eternal Oil had also had the same, with 9.62 billion naira in the second quarter, contributing to the overall 15.4 billion naira loss in 2023. And Eternal Oil had also experienced a foreign exchange loss of 9.6 billion naira. And given the ongoing depreciation of the naira, even as we speak, there are a lot of measures being put in place by the fiscal and monetary sides of government to, handle or deal with the issue forex crisis that Nigeria is currently facing. And we had seen this, and there are, assumptions that Eternal Oil will, it's increasingly unlikely that Eternal Oil will beat its first quarter 2024 report compared to the last quarter of 2023. But we also like to point out that the Eternal Oil's balance sheet had revealed challenges in the financial leverage ratios. The debt to equity ratio and the equity multiplier have been strained due to the analyst and company's recent losses and consequent reduction of shareholder equity. And Eternal debt to equity ratio stands at 11.997, which reveals that the company holds nearly 12 times more debt than equity. And equity multiplier of 16.9 implies that 1 naira of equity, the company possesses approximately 16.9 of assets. And lastly, let's take a look at the Nigeria Breweries report released yesterday, I believe, where we did see the Nigeria Breweries end the year 2023, revealing tremendous losses as well. We did see a net loss of 106 billion naira for the year, and that is again largely due to the currency devaluation that was that played out in the market for the most part of the last quarter of last year and this year so far. And the audited results, which were released to the Nigerian exchange yesterday, indicated that the revenue rose by 9% versus the prior period of 2022, making tremendous losses again within the Nigerian Breweries report, which was released. However, there has been conversations around the revenue rising around by 9% versus what we had seen the previous year. And the company also reported an operating profit of 44.5 billion naira in 2023. And this was lower than 15% compared to the corresponding period in the previous year, citing an increase in input costs, one of reorganization costs, and another economic pressures causes of the decline. And we did hear from the managing director, CEO of the Nigerian Breweries PLC, in the person of Hans Esadi, where he spoke to the business performance in the 2023 report, saying that it reflects the challenging economic environment in Nigeria. And he also did say that there are severe economic conditions like the issue of persistent cash scarcity, removal of fuel subsidy, as well as the naira devaluation and foreign exchange scarcity. And Nigeria Breweries also revealed that its reaction to the challenges presented by the tough economic terrain was centered around reducing risk to the business by focusing on positive price mix and also efficient sales operations, strong and aggressive cost management, and other efficiency methods. And despite these challenges, the business recorded some progress. I must point that it did say it had made some progress so far, which was delivering a 9% growth in revenue, which was aided by a positive price mix. Unfortunately, he also did admit that the efforts of the Nigerian breweries were undermined by the impact of the devaluation of the naira, causing a 153 billion naira loss on foreign exchange transactions. That is it for today's edition of the program. And again, like I stated before, we did review some of the major financial reports from major companies such as Etana, Nigeria Breweries, PZ, and Airtel Africa. And one thing that stood out for all of these reports is the issue around losses, around foreign exchange, and how this impacted in the levels of losses from these companies. But that's the much that we can take in today's edition of the program Business Daily, coming to you on Trust TV. Join the conversation on social media and let us hear your thoughts on all of these reports that have been reviewed on today's edition of the program. My name is Chiamaka Nendu. Thank you for watching, and bye for now.